This isn't another get-rich-quick video. This is a get-wealthy-slow video.
The crypto market, by its very design, is a machine built to transfer money from the impatient to the patient.
But patience is just one piece of the puzzle. The real secret? It's the mindset. It's the psychological framework that separates the 1% from the 99% who end up as exit liquidity.
I've spent years studying the most successful investors, the billionaires, the fund managers, the OGs who bought Bitcoin when it was a rounding error.
And they all share these 7 core mental models. So why do most people fail? It's painfully simple. They treat crypto like a casino. They buy the FOMO, the fear of missing out, at the absolute peak, usually because some influencer on TikTok told them a dog coin was the next big thing. Then, at the first sign of a panic, their portfolio is a roller coaster driven by greed and terror. The billionaire mindset does the exact opposite. They are the ones buying your panic.
They are the ones selling you the euphoria. We are about to deconstruct all 7 lessons, step by step.
If you are serious about changing your financial future, do one thing for me right now. Hit that subscribe button. Becoming a true investor is a long-term journey, not a single video. This channel is your home base for it.
Commit to your education. Click subscribe. Okay, let's begin.
The gambler mindset is obsessed with timing the market. They sit, eyes glued to the 1-minute chart, trying to find the perfect entry and the perfect exit.
It's a fool's errand. It's impossible. It's gambling.
The investor mindset focuses on time in the market. They don't care about today's price. They barely care about this month's price. They have a thesis, a core belief, and they have a time horizon of 5, 10, or even 20 years. When you have a 10-year outlook, a 40% crash isn't a catastrophe. It's a discount.
It's a Black Friday sale for assets you already believed in.
The people who bought Bitcoin in 2015, 2017, or even 2020 didn't become wealthy by trading it every day.
They became wealthy by holding it. They understood that true wealth is built across multiple market cycles.
Not inside a single 24-hour news cycle. They use volatility as an opportunity to accumulate.
Not as a reason to panic. They aren't timing the market. They are outlasting it.
And that long-term vision is only possible if they make.
This is one of the most powerful concepts in all of finance, and it's the lifeblood of crypto. An asymmetric bet is simple. It's an investment where the
potential downside. Let me explain. The gambler mindset makes symmetric bets, even if they don't realize it.
They go all in on one hot token. They risk 100% of their portfolio to make 100%.
Or, more likely, to lose it all. The investor mindset makes asymmetric bets.
They never risk their entire net worth. They make a series of small, calculated bets, maybe 1% to 5%
on new narratives, on unproven tech. They fully accept that 9 out of 10 of these bets might go to zero. They are prepared to lose that 1%. But if that one bet hits, it doesn't just do 2x. It does 50x. It does 100x. That single winner pays for all the losers and drags the entire portfolio into a new stratosphere. They are constantly looking for opportunities where they can lose 1x.
Think about it. You can be wrong 90% of the time and still become extraordinarily wealthy.
This strategy completely changes your relationship with failure. Failure is no longer a disaster.
It's a calculated cost of doing business. But how do you find those 1 in 100 bets?
You don't find them on TikTok, you find them with
The gambler mindset gets their research from Twitter influencers, from crypto bros on TikTok, and from YouTube videos with screaming faces and rocket emojis.
Their only question is, when moon? They are victims of hype. The investor mindset is an obsessive learner.
They are an information sponge. They build conviction, and conviction is the antidote to panic.
They read the 80-page white paper. They study the tokenomics. How is the token used? Is it inflationary? What is the vesting schedule for insiders? They analyze on-chain data. They follow developer activity on GitHub. They ask the only question that matters. What problem does this solve, and why is the blockchain the only way to solve it? They are building a deep, fundamental understanding of why an asset has value. This deep research does two things. First, it helps them identify those asymmetric bets we just talked about. Second, it gives them the courage to hold during a brutal bear market. They have conviction. They know the fundamentals haven't changed. They trust their research, not the mob. They have conviction. They know the fundamentals haven't changed. They trust their research, not the mob.
All right, we're at the halfway point, and you're still here. That tells me you're serious. If you're finding your mindset shifting even...
Take 1 second, click subscribe, and just as importantly, ring that notification bell. Don't let the algorithm decide if you see the next video. Take control. All right, now let's get into the most difficult lesson for most people.
The gambler mindset hates being bored. They need action. They feel like if they aren't trading, they're missing out.
So they overtrade. They buy tokens they don't understand just to get in on the action. They check their portfolio 50 times an hour.
They are an addict looking for a hit of dopamine. And in trading, that addiction is fatal. The investor mindset embraces productive boredom. They understand that the best move, most of the time, is no move at all. Warren Buffett said the stock market is a device for transferring money from the active to the patient. This is 1000x true for crypto. Successful investors are comfortable being bored. They set their strategy, they make their buys, and then they walk away. They go to the gym. They read a book. They focus on building their primary career or their business.
They let their long-term investments do the work for them. They know that not trading is a position.
Holding is a decision. Waiting is a strategy. They have an ironclad discipline that protects them from their own worst impulses.
They have an anti-FOMO shield. And the best way to build that shield is to
The gambler mindset relies on emotion, instinct, and gut feelings. Their investing is sporadic.
They buy when they feel euphoric. They sell when they feel terrified. So, they remove it from the equation. How? They build systems. The most powerful, simple, and proven system in history is dollar-cost averaging Clurid.
It's almost boringly simple. Instead of trying to time the market, you invest a fixed amount of money, say $100.
At a fixed interval, say every single Friday, regardless of the price.
If the price is high, your $100 buys less. If the price is low, your $100 buys more.
This simple, automated system removes all the emotion. It removes the stress.
It removes the impossible burden of trying to predict the future. Over time, DCA guarantees that you buy more when the asset is cheap and less when it's expensive. It gives you a favorable average entry price.
This is how you turn volatility into your ally. billionaire investors love systems.
They automate their savings. They automate their investments. They build a financial machine that runs in the background, freeing...
The gambler mindset thinks in absolutes. They are dogmatic. Bitcoin is going to $1 million. This project is guaranteed to fail.
This is the only solution. This all-or-nothing thinking is rigid, emotional, and dangerous. It makes them blind to new information.
The investor mindset thinks in probabilities. They never deal in absolutes. They live in a world of gray.
Based on my research, there is a 60% chance this project succeeds, a 30% chance it stagnates, and a 10% chance it fails spectacularly.
This probabilistic thinking is a superpower. Why? Because it allows them to change their mind.
If new data comes in, a major security flaw, a key developer leaves, a superior competitor emerges, they don't have an emotional breakdown.
They don't suffer cognitive dissonance. They simply update their probabilities.
This new data lowers the probability of success from 60 to 20%. My thesis is now invalid.
For them, selling is not an emotional failure. It's a logical response to new information.
This flexibility is what allows them to survive. The market is a graveyard of dogmatists who diamond-handed their portfolios.
All the way to zero. The flexible-minded investor adapts, survives, and thrives.
And this leads to the final, most crucial lesson.
They just hold and hold and hold, watching their portfolio go up 100x on paper. They feel like a genius. And then the market turns. They watch all their paper profits evaporate, all the way back down.
They tell themselves it'll come back, until they are left holding a worthless bag. This is the most common and tragic story in crypto. The investor mindset knows that you do not make a single dollar until you sell. They have an exit plan before they even click the buy button. They are just as strategic about selling as they are about buying. They set clear, predefined profit targets. When this investment hits 10x, I will sell 50% of my position. This strategy is brilliant. They immediately recover their initial investment plus a significant profit.
The rest of the tokens they hold? That's the house's money. It's pure, risk-free upside.
They take profits systematically on the way up. They don't try to sell the absolute top. They sell into strength. This removes greed from the equation. It's a system. It's a rule.
This is the difference between paper wealth and real wealth. One gets posted on Twitter. The other pays off your mortgage.
Let's bring this all home. The $1 million crypto mindset isn't about being smarter than everyone else.
It's not about being lucky. It is about being more disciplined. It's about mastering your own emotions. It's about doing the boring research when everyone else is chasing hype. It's about building systems that protect you from your own worst instincts. You don't need to implement all 7 of these lessons today. It's overwhelming. Just pick one.
That is the moment you stop being a gambler, from chaos to stability. And you start becoming an investor.
That is the moment you stop being a gambler and you start becoming an investor.
And now I have a question for you. Which of these 7 lessons was your aha moment? Which one do you need to start working on today?